and we'll be good. What's up, everyone? We'll be starting momentarily. All right, never mind. We're just going to start now. And then once we go to Facebook, then the Facebook people will be in later. So good morning, everyone, and welcome to another Mortgage Coach Friday Mastermind. I am Todd Bookspan, the founder of Win by Noon, in behalf of Dave Savage and the entire crew over at Mortgage Coach and Sales Boomerang. Welcome to another Friday Mastermind. And you know what? We got a special treat today. You know, we've got always the co-hostess with the mostest, Deborah Bird, and Deborah is here. Welcome, Deborah, the CEO and founder of Plug and Play SM. What's up?
Okay, can y'all tell us apart? Can you tell who's who?
Well, and look at that. There's two of you there.
Yes.
All right, so we're going to talk about mortgage rates stressing people out, starring Denise Donahue, aka the Mortgage Nerd. So that's pretty darn exciting today.
Yeah, I feel like it's pretty timely. I kind of feel like I'm in the hot seat because my gosh, rates have just been crazy. But you know, I actually think that the increased rates is a good thing, which I know is going to put me in the hot seat a little bit. So I'm excited to talk about it today because I think it's a really important topic, and I think it's probably stressing a bunch of loan officers, clients, and realtors out. So let's unpack it.
You know, I love that you say that that you think it's a good thing. It's interesting to me because I did 6 interviews with real estate agents yesterday, and you know, the ones who were kind of in tune, I would say, like, you know, the people who are the stars of the local market, just like you're one of the stars of the country. They all said that what they loved about this market is it's now a skill-based market, that if you don't have the skills, you're going to struggle. But if you actually either have the skills or can learn the skills, that you can thrive. And so I'm interested to hear you unpack that. So, I mean, let's just start there. So why do you think it's a good thing?
You know, here's the thing is, it's like I tell my clients, I'm like, would you rather have this market or that market? And usually when I say that, people think that I'm comparing it to the 2008 market. I'm not. I'm comparing it to the market that we had at the beginning of this year and even last year versus where we are now. Meaning, if you were a buyer, at least here in the DFW area, in order to get your offer even looked at, it was like you had to offer $100,000 over list price, which meant cash, of course. You had to waive any kind of appraisal waiver, meaning that you would guarantee that you would waive any kind of repairs or anything like that. I mean, you were giving away your firstborn child. And so it's like, imagine how many buyers couldn't even compete in that kind of market, because on top of that, you also had to have the conventional and the 20% down and all that kind of stuff. So the buyers didn't even have an option at that point. They were eliminated because if you didn't have that wad of cash up front, you couldn't even play space, and at least again in the DFW area. And so because the rates have increased, it has changed the demand. It has caused sellers to be like, maybe now I should go ahead and list my house. So we have a little bit more inventory here. And the reason why I think it's a good thing is because it has created more of a balanced market. And I ran the numbers on this, of course, using my mortgage coach tool of, okay, let's just compare a $500,000 loan at a 3.5% rate versus the same type of loan at a 5.5% rate. What's the interest expense difference in, let's say, 10 years? Now, the reality is it really 10 years? Statistically, people are staying in their home 9 or 10 years before they sell, but there's a massive refi threat and boom that's going to come in the next, I'd say, year, 2 years, 3 years. I think the longest recession lasted 24 months. There's data and research to show what has happened to mortgage rates after recessions. And so even running that analysis over 10 years is super conservative, because would that person that when I ran the numbers, the rates were 5.5. They're not 5.5 this week, but when I ran them, they were 5.5. And the interest difference was just shy of $100,000. And so it was like, okay, if you didn't have the wad of cash or the rich family to gift you that cash, you know what I mean? You couldn't even play in the game. Now, yes, your rate's higher, sucks. Maybe the $500,000 house you were looking for, you can't afford anymore. Now it's the $400,000 and your rate's higher, but you're dating the rate. When rates come down, you can always refinance it. We're not guaranteeing that they're going to come down, but it does make a more balanced market, which I think is healthier for all of us. I mean, I didn't thoroughly, I loved the paychecks I was getting, but I didn't love the like hair on fire days that we were having, for the last 2 years. And so I think it's a good thing we have a balanced market. I think how we spend our time and then how we're educating consumers on why now is still a good time to buy is what a lot of us have to get better at. And maybe some of us are sitting there thinking, I don't know if it is. I don't believe that it is. And it's not for everybody, but the beliefs I think we have to challenge right now of, is it still a good time to buy when rates are this high? And how do we present those rates? How are we educating clients that just last week rates were in the fives and now they're in the mid sixes? Like, that is the true anxiety and stress that a lot of us are experiencing right now.
I love that. And I messed up the intro here because I should have had your sister introduce you. Like, do you feel like everyone here knows who you are? You want to give Deborah, you want to give a quick bio on your sister? So, we let her talk. Now everyone's got their interest peaked.
Oh,
but
Lord.
maybe there's like 2 people in this big crowd or watching this that don't actually know who she is.
Well, Denise Donahue is a top originator in the DFW area, which is Dallas-Fort Worth, all of Texas. She's my roommate. She's 12 minutes older. I know you guys were probably looking and thought, wow, you look like the younger sister. But, she's one of the leading teams in the area and really in this community who's always come from abundance and sharing her best practices and how she's built the team. And I would say that's what really separates you from a lot of the loan officers, is you are the only loan officer in the branch producing. So the 720 families that you helped last year, funding over 220 million, was based off her well-oiled machine of being able to consistently have a pipeline, that you never have to worry as a LPP1 or a loan officer assistant of like, oh my gosh, are we going to have any closings the next month? So she's always had this consistent flow. And I think it speaks volume to the level of service that all of her assistants, what they provide. And that comes from a lot of training and retraining. And so she's the best.
I love it. I love it. And one of the only 2, I'm sure there's more, if you guys are listening, raise your hand, but one of 2 loan officers I know in the community who we've found on stage who has volume that is increased in 2022 versus last year. So kudos to you for that.
Thank you. I don't feel like I'm working more, and some of us might feel like we're working more, but you really just have to work differently in this kind of market, because I would say the buyers today are more of people who need to buy. And so if you dig deeper, okay, well, who actually needs to buy? It's no longer the bored sellers, if you will, that are just kind of bored with their home and, yeah, I kind of want a pool, so let's just sell our house. Rates are cheap, got a lot of equity, it's kind of easy to sell right now. You no longer have those bored sellers just looking to move. It's more of the people that have to buy. So let's dig into that. And this is the kind of stuff I'm having with my team is, who do we think have to buy right now? Well, if you're renting, rent has gone up 22% in the last 2 years. So, you're probably pretty frustrated with your rent and you don't really know any better. You hear that rates are higher, but they don't know any better. It's people who are renting, people whose families have grown in size. My next door neighbor just had twins and they're like, we're busting at the seams. So they need more space. People who need less home, downsizing, maybe kids are off to college, maybe there's been deaths, maybe you had a divorce, maybe you have to have a job relocation. So there are still a lot of people who buy and sell in high interest rate markets. It's just, how are you now maybe marketing to those people? Are you changing any of your strategies in this kind of rate environment? A lot of the stuff that Deborah does for my social media now, because she manages my social media stuff, is our target audience is going to look a little bit differently. I think last week we had a video challenge about a lot of relocation stuff, because in DFW, we do have a lot of relocations here. That is a need type buyer, not necessarily a want. So the stuff that we're producing is more driven around those types of clientele. Whereas I think in the last few years, you could fish in almost any pond and catch the fish. But now those ponds are a lot more narrow. So you just have to be more strategic and intentional with the time that you're using to market, because the buyers, I think, that are out there right now are people who are need to buy.
Well, I think that's a super valid point. I mean, one of the realtors I interviewed yesterday who's been in the business, since the late 70s, right? So he's a seasoned agent. And he said, right, that was what happened back when interest rates went above 10% in the Jimmy Carter days, is people still needed to move. And I think people forget that, but it's not, Deborah, right? When we interviewed Bill Hart on Monday, right? Bill said, hey, last year was like those cash machines where, you go in that little, like a telephone booth looking thing, for those of you who actually remember what telephone booths are, and they swing the money around in there and you're just pulling $100 bills. I mean, that's what Bill likened it to. And so I think it's the whole idea of the data, right? You seem to be super focused on data. I love your new podcast, the Nerd and the Bird podcast. So if you guys haven't checked it out, make sure you do. But one of the things that you mentioned, I think maybe in the second episode, was around the data. So when you're sitting there with a first example that you gave where you said, hey, I took the time to figure out what's the interest cost difference, and you're having this higher level of conversation. So talk about that for a minute, because I think a lot of people just forget that, the numbers matter. And I always say that the numbers help someone take what's an emotional decision and actually allows them to make it a financial decision instead.
Yeah, absolutely. And I'm actually having a whole master class about this in October that I'll share with you guys. So you have the date on it, because it's one of the most popular questions I get is, I am always been a numbers nerd, in part because I'm not super emotional. If you look at any of my personality tests or DISC tests, I call it being the Derek Jeter, very laser focused when I'm in the game. There's not, even if I'm super excited, you don't see me get too excited, or I don't get too down. Very just kind of even kill.
I call it the Tin Man. I question if there's a heart
That's
in
all
there
right.
sometimes.
And if you don't know who
There is.
If you don't know who Derek Jeter is, don't worry. He used to be J-Lo's fiance for a while before she left him for Ben.
Listen, if you haven't seen his ESPN, like, I think there's 7 episodes. Let me tell you, it is so phenomenal. He's the greatest baseball player of all time. I don't care if you're a Yankees fan or not. It's there. I said it. And I'm born and raised in Texas, and I'm still saying that. Anyways,
That's because the Rangers suck at the moment. But anyways,
I don't think they've been good for a very long time.
Rangers or Cowboys. Anyways,
Still not been good for a very long time. We'll keep it moving. Data just keeps you so grounded. It's like, when you have the numbers and the math, it's to your point, it takes you away from being emotional, or I feel like, comments like, I feel like rates are too high to buy right now. Or I think sometimes the consumer looks at interest rates like gas prices, and it's like, oh, the gas prices are high right now, but in a couple of months, we're kind of programmed to think that they'll come back down. They don't typically stay up for too high. And I think people have that same kind of connection with interest rates, because they just don't really know any better, and they don't know how they work. And that's sort of the point of this masterclass, is a lot of loan officers don't truly understand even how interest rates work. They don't understand how the mortgage bonds impact the rates, and how the federal funds rate doesn't necessarily directly impact that. And then even more so, because I am a nerd, the beautiful thing about this isn't the first time our country has been in a recession or with high inflation. And so we don't have to act like know-it-alls and be able to predict. We can go back in time and look at, well, what happened with rates in the prior recessions? How long do typically recessions last? And I did, truth be told, get into a small little debate with somebody on my team. If you know my team, you know that debate is always with Eric, because he challenges me the most, which I love. But he was kind of bringing in his political views into when he thinks the rates are going to change, versus more of what I would call the data and the research and the supply and demand that, we're still seeing in the country with COVID and ports being locked up still. Although I read that today, there's, I think, only 8 ships that are still, we're getting towards the end of this whole COVID supply crisis. And so is it political where we think we're going to see that change? Or is it that, okay, Eric, how long does the average recession last? And the reason why it's important to know that is because your clients are looking at you for advice. And so if you're going around saying the really catchy saying of, marry the home and date the rate, are you just saying that because it's catchy, or are you saying that because you truly believe that rates are going to come down? And your client's going to ask you, well, when do you think they're going to come down? Because that's going to impact, am I going to pay discount points or not? Am I going to do a temporary buy down strategy or not? Am I going to do an ARM? Well, when you're setting up your mortgage coach and you're using that short-term factor, it's like, how do you know what short-term factor then to use if you're not digging into the history, I guess, and research of how long you think we might see this recession, and then what typically happens with interest rates when a recession or inflation comes down? You know what I mean? It's like, I hated history and studying history in school, like literally hated it. I would do math all day long, but the history was so boring to me. But in this year, in these last few months, now more than ever, probably Dan Keller is forcing me to get more, historical, because you can study those kinds of things. And look, I know that COVID is real, and I know that we've never seen a situation like this where we're coming off of COVID and people filed for all those forbearances and we pumped out a bunch of PPE type loans for people. And like, we've never seen a market like this. Don't get me wrong. I'm not naive to that. But what I am saying is you do have to study and research enough to know what happened in prior markets, so that I'm not telling my client 100% rates are going to come down in 18 to 24 months. So let's pick the, nobody, not even the smartest economist in the world can predict that. But I am giving them, I can't unfortunately tell you what to do exactly. If I could, I'd probably be a millionaire right now. But what I can do is I can tell you the research I've done, what I think will happen based on an educated, formula, not just, a guess or an emotional or political or whatever, you know what I mean? So that's part of what I want to help teach loan officers, is where the heck do you go to find this stuff, and what stuff do you read? And I think that's just some of the things that the loan officers at our company have shared with me, is I just don't even know where to go, because you feel like you'll Google something and is it like watching the news where it's biased, or is it legit? Where do you go to find this kind of stuff? So I think that's ultimately, if you've got some downtime and you're a loan officer right now, you need to be becoming a student of the data and the research and what's happened before, and so that you can sound and ultimately be educated and be that leader for your client and the realtor partner.
I 100% agree. And I feel like that's where I think a lot of people miss it, right? Everyone is busy right now, right? So I always ask the question, is busy doing what? And I just remember when I was a new loan officer, the amount of time I spent researching things so that I sounded more educated than everybody else that they would talk to when they were shopping loans. Because again, I think we always know loan competition goes up when people are either disappointed or surprised by where interest rates are. And so therefore you just got to outclass the competition. So you mentioned your master class. So, certainly I have no doubt that there'd be nothing more fun than to learn from you. Where do you go and what do you study? Is that what the master class is about, or what else are you going to be talking about?
This master class is going to be just solely about interest rates. How do you understand the rate market? How do you read a candlestick chart? But then I'm actually going to show behind the curtain of how I present rates to a client, because I very rarely get shopped. But when do I have that rate conversation throughout the process? How do I present it, and how I control the narrative to ultimately prevent them from doing the shopping on their own? And it just kind of developed organically, because I've got people that reach out to me by email and through social media, and they're struggling, maybe their production's down, and I was like, you know what, I made this a goal at the beginning of the year that I was going to be hosting. I thought my first one was going to be about social media and building a brand, but lately I've had so many people, with what's going on with rates, that I thought, okay, no more delaying it. October 4th, 2 p.m. Don't have the website completely built out yet, but I just got the domain name. I can't remember it, but October 4th, 2 p.m. It's going to be a live masterclass where I'm showing you guys, and I don't have any kind of affiliated like links where I get paid for stuff. I'm going to show you, yes, I use Mortgage Coach in my presentations, how I use it, what I subscribe to follow the bond market, not because they're paying me to say that. I'm saying this is literally what I wake up and do. And this is the kind of conversations I have with the client, and this is how I present, because I am the only originator in my branch. Most of the loan officer assistants or loan production partners, whatever you call them, they will set up my total cost analysis for me but I am the one that's presenting it to the client on every single transaction. And so when you are in a rising rate market like this, people naturally, when they get a rate, even if you're sitting there as a loan officer today and you're like, gosh, my company's rates suck. They're so high. I mean, we've probably all said it this year, like, wow, these rates are high. And you're like, what's the company doing? If you understand the market and you can present in a way where the client trusts you, because they're going to have that same feeling. Your rate seems high. And when they feel that, their knee-jerk reaction is, I'm going to go shop it. Because emotionally, it just feels and seems high. Even though all over the news, rates have been increasing. Holy smokes, a 7% rate, which if your FICO stinks, we all know we're quoting 7% rates right now. It feels high. That feeling will cause them to shop. You're going to be shopped more in a rising rate environment than ever. So how can you limit the shopping, but still make your client feel like that you're the best? And there's an art to that. And I feel like I have figured that art out. And I feel like if I can help more loan officers learn that art, maybe it'll make a difference in your business and your family's life. And so it was something I set forth at the beginning of the year, and I'm like, okay, October 4th, it's not about social media, but it's about interest rates, and I'm really excited about it.
So after everyone attends the 1 by Noon operating system coaching, because that's the day that
I know.
You then just go from the 1 by Noon coaching. So if you haven't signed up, make sure you sign up for that, and then you jump over. How could they, since you don't remember the domain, good job. How could they learn more?
It's nerdmasterclass.com, but it's not completely built out yet.
So how could, if they wanted
just email me, Denise@themortgagenerd.com.
We'll promote it here, and I'll promote it in the Win by Noon community as well. Just know, certainly I'm excited for it. I know I'll sign up for it. Yes, after I get done with my coaching group, then I will jump on with you. If someone can attend it, is it going to be recorded and they can purchase that?
Yes, yeah, you'll have access to it for 30 days, and it's going to be live. And I'll even do, I do it now where people reach out to me and they ask me questions. But what I've found is it's so difficult to just respond to a singular question because it's an onion. And so I feel like I'm doing a disservice by being like, yes, here's how I do it. But I'm only giving you like one layer of the onion, that I am a visual teacher and a visual learner. It's how I present to my clients as well. And so I'm like, I just need you guys to see it. And I just feel like you'll get a lot less rate questions, and ultimately you'll learn more about how the rate market works. Because when I started my career at a big bank, big retail bank, you didn't have like an optimal blue with different rate options. And there's nothing wrong with working with a big bank, but this particular bank that I worked for didn't teach you anything about rates. So you just they just said, here's your rate sheet and this is it. Fortunately, I'm at a correspondent lender that has an optimal blue type where we have different banks and we can see their rates. But when I left the bank, I was like, whoa, what are all these rates? Why is this rate different than this rate? And, does a 2-1 buy down make sense? I've never even heard of a 2-1 buy down. I mean, these are strategies that we weren't using this last decade because rates have been so low. And so how do you figure out what strategy to do, what's best for the client, but not overwhelming the client that they're like, okay, too many options. It's like when I go to Cheesecake Factory, it's like, if the menu is too big, the brain shuts down.
Don't even lie. We order the same thing no matter where we go.
We
eat like 3 different meals.
Yeah, like that's a big.
It is a big deal.
But then when you're with somebody at Cheesecake Factory, it's like you're waiting like an hour because we know what we're getting.
Lots of
bread.
What
You get cheeseburger.
No, I like the
meat, cheese, and bread only.
herb crusted Parmesan chicken with the mashed potatoes.
We couldn't be more opposite.
It's not deep fried. You eat chicken that's not deep fried?
No, I don't even like fried chicken. I take the skin off of fried chicken.
She's un-American.
I have texture issues.
All right. Well, listen, I'm not going there. So let's I feel like it's so funny because I feel like I'm interviewing the two of you, but I've not allowed you to ask enough questions, Deborah. So
Todd, I have a question for you actually.
Okay.
Because you lead a big team and you've always had, massive success year over year. What kind of conversations are you having either with clients or with the loan officers on your team from a leadership standpoint of helping them navigate kind of the chaos with interest rates right now?
Well, I would say this, right? Number one is it's always been a strong suggestion to use a TCA. A lot of you know my story. I mean, as weird as it sounds, almost 23 years ago, I got in the mortgage business. I went out and bought some pants. And the next day I showed up at the office and they're like, we're going on a field trip. We're going to a seminar. And at that seminar, I'd never closed a loan. I was a stay-at-home dad, get my MBA at night, and I bought Mortgage Coach. And so I would always joke that it was kind of a strong suggestion on my team, but it's been for the last couple of years a mandatory requirement, because I believe you've got to actually, what I said earlier, you've got to separate out the emotional piece from the financial piece. And I don't think there's a better way to do that than with a TCA. And what our team does is a little different. So even before Win by Noon existed, we did a daily team call. So 8:45 every day, 15-minute call. Every loan officer is expected to be on it. There's 4 loan officers on our team. And my business partner, Matt Baker, runs the sales side. My wife, Tara, runs the operations side. And so Matt leads a call every day. And he's giving some type of, financial education, right? Matt's very, he's cerebral like you guys are. So he thinks about this stuff, and he really tries to break down what's really complex, right? This information that Denise is going to talk about teaching in her masterclass. And he teaches it to the loan officers so that they can go out there and have higher level conversations. Like one of our loan officers used to work at Wells Fargo for 15 years. And, he loved Wells Fargo, but they just, you already said it, Denise, they don't teach him that there, and how to have those conversations. He got relationship transactions because people had a checking account there, and it was easy to go walk over to him who was sitting at the mortgage desk, get a mortgage. My brother-in-law's, a 4-year now loan officer, right? And so he didn't have that financial background. He came out of the restaurant business. And so to be able to have that. So every day they do 2 things on that call. Number one is that they're held accountable to their number. So even before Win by Noon existed, all the metrics that are recorded and all the results that are tracked in the planner, they all give those. So it's an accountability piece, right? Because you don't want to get on that call and be the person who's like, I made 1 phone call yesterday. And then all of a sudden you talk about your leads and your applications, and they're a goose egg because of the fact that you didn't actually do the activity. So number one, it's an accountability piece. When I used to lead it, I used to try to shorten it, say like, hey, we don't want to do this 5 days a week, because I was tired of myself talking. And everyone on the team said, no, we have to have this every day, because if not, I won't stay accountable to my activities. And then the other part was we always were trying to solve a problem. So again, you also learn from your mistakes, you learn from your conversations. So I jump on probably 2 or 3 days a week. I'm on the call with Matt and the team, and someone will walk through a story of a challenge that they've had, a client who thought X but ended up realizing the answer was really Y. Typically revolves around learning from a TCA, using that to show them what their thinking is. Again, because you said it, Denise. I mean, some people come and they've got a political focus on it. Some people come and they're just overwhelmed by the home buying process, let alone by where interest rates are. And I think the one advantage that we have in this current market today is that there's so much news about interest rates that most clients aren't surprised today that rates are higher, but someone that you pre-qualified a month ago or 3 weeks ago in the mid 5s is probably going to be surprised if you haven't done a weekly check-in, a target day activity, as I would call it, to let them know, hey, just don't want to scare you, but rates are going higher, right? I mean, if you pre-qualified someone at 5.5, you got to be requalifying them, at 6.5 now. And so keep those kinds of things in mind. So that was a long-winded answer. Deborah, did I help? Did I answer the question?
Yes, and the second part to the question, this is really for both of you, is then how are you educating your real estate partners or, CPAs, financial advisors? But I think it's one thing to make sure that you're keeping your team afloat with what's going on with the truth. But then what's your strategy with real estate partners?
All right, you go first, Denise.
Okay. I've been decent with realtor partners. Where I've sucked at really is, I've shared this before, financial advisors and CPAs and those other pillars of business. It has been a focus of mine this year, but I just always felt like, do they care what's going on with the interest rates in the real estate market? And at any rate, really, Todd and Dave put a fire under my butt that don't overcomplicate it. It's just like anything else. And so I don't necessarily know if my playbook is great, but I'll be honest and tell you what I'm doing now is every Friday I send out an email to my realtor partners. I typically give them, I either take a graphic that Plug and Play has created so that they can use on their social media, or I'm really trying to put together the numbers of, here's a principal and interest payment chart at different loan amounts with different interest rates, just trying to equip them of, here's where the rates are, here's how this impacts the payment. But I really don't want them going out on their social media and doing the whole doomsday of rates are high, rates are high. How can we still present in a way that even with rates high, there are still investors buying investment properties, and it's still a good hedge against inflation, like that's kind of more of the message I like to equip my real estate partners with. So every Friday I will do that. If there's a big swing in the rates, kind of like what we've seen in the last 2 weeks, my CRM that I use, it has a text message feature. I've never mass text messaged until this year. I've only done it once. I might do it again because of this swing, but I disguise it where it looks like I do a bracket and I put auto update because I want them to think that this is just kind of like a rate alert. But I'll tell them, hey, rate alert, rates have gone up. What's tough is that we've pre-qualified a lot of clients this year. So my problem is are all these agents going to respond back to me, or all these clients all at once and now want to refresh pre-qual? Or, you want to keep them informed, but I can't overflood my boat. So that's a problem I'm dealing with today, is keeping people informed. But pipeline management, Todd, what you were talking about is like, that's a value add to your real estate partners, because if there's people under contract, especially for new construction, and you are looking at a home price and rates, 6 months ago versus now, if you don't start having those conversations now, it could blow up at the end. And then how does that look with your realtor partner? You can really mess up some relationships right now. So all in all, a proactive response is best. I haven't figured out the exact recipe on how. What are you doing, Todd?
Well, I think your word proactive is right? So, Deborah knows it because she spouts it out all the time. In fact, it's funny because I pulled it out to show it to a realtor yesterday who was in my office. It's the ideal week, right? So the ideal week is proactive, right? So our team follows the ideal week that I put out there. So Thursday is realtor update call day. So they're calling, realtors every Thursday. So one is they're being proactive with their calls. And again, they get on Friday's call and they have to put their numbers out there, and they don't want to, if you didn't call any realtors the day before, then you look kind of like, hey, I didn't actually do what I'm supposed to be doing. And so I do think the accountability part helps in being proactive. The big thing that I'm pushing out and really encouraging people to do is text video to engage with their real estate agents. So we talked about it last week when we interviewed Jonathan Roach. It was a perfect example. If you go back to the interview from Jonathan Roach and you go partway down the comment feed, you'll see Jonathan gave a link to his, I think it was called the 6 ways to reduce stress. And so it was a perfect example of what I do and have my team do. It was a 6 key habits to drastically reduce stress. And so Jonathan gave us the great script. Like normally it's me giving the script to my team or to the, Win by Noon group. And it was, hey, Liz, I hope you and your family are thriving. I just listened to a podcast covering the 6 key habits to drastically reduce stress. So I'm forwarding this list. The current market is stressful for all of us. So you and your team may find this list helpful. Reach out to any time if I can serve you and your clients in any way, and have a fantastic weekend, Liz. Then Jonathan. So, and you guys can just ping me. I'm happy to send this to you if it's easier to find it that way. But I think it's a perfect example of, my favorite one, when I did my last coaching group, and it was, you all know me, I'm random, right? So it was just, my group coaching is about 60 minutes of actual coaching, and then it's 30 minutes of Q&A. So it's, just off the cuff, people asking questions. And somehow I tend to volunteer things that I'm forcing myself to do. So again, it creates accountability. And I still do business development for my team. So I'm talking to real estate agents all the time. And so I said, hey, I'm just going to take some of the slides from one of our mortgage coach calls, and I'm going to create a video and send it out to realtors. And so all I did was I sent a text message out to realtors that said, hey, I prepared some slides for a video of some slides for my clients on what's happening with interest rates in the market. Would you like a copy ? So again, I didn't just send them all the information. I actually wanted to engage in a conversation with them. So I sent them the text, And guess what? Almost 100% said yes. There was one person who said, hey, who is this? Like they didn't even know who I was. I was shocked, but that happens. And that's what everyone's worried about. And I was like, it's me, Todd. And he's like, oh, okay, thanks, Todd. But they like everyone but one person asked me for, I sent it to 30 some odd people, asked me for a copy of it. Then I sent it to him and I said, feel free to share. And I would love to hear your thoughts. And then again, that created engagement. And guess what? Then it gave me a reason to call him. And so I was able to call him and then create that conversation. And in those conversations, I'm asking him for examples. The morning calls, we're getting examples of clients. And then that's what you can share next week with everyone. So I think really what it boils down to is proactively communicate with your real estate agents, proactively provide them with information and examples of people that you've helped, right? An easy one is a 2-1 buy down video. We did that with the TCA. We do them on articles a lot. I talked about it on, I think it was the Tuesday call that I talked about it with John Downs. He mentioned an article in Housing Wire, and I said, this is a perfect one. So it's actually on my to-do list for today to create that video and then do that exact same, scenario that I walked you through. And it's just give them tangible examples that they can use to tell stories to their clients. And then what you learn from them, ask permission to share with other people. So for me, literally there's just walked by my front here was a realtor who's coming in. I'm going to be interviewing her for 25 minutes after this call is over. I've got, I think 4 more interviews today. So I'll do 10, over 2 days. And so I'm just talking and getting face-to-face with real estate agents to get information from them that I can turn around and share.
So the one social tip that I would say with everything that you just did, Todd, is that would be a great example for any loan officer listening. You could do this as a story, as a reel, as a live. If you put it and share it on your story, there's an easy way to use the sticker icon. So if you're on Instagram, it's the icon that looks like a square with a happy face. And you can do a poll, you can make it a question, but encourage people to DM you. Like you can say, just shoot me a DM with your email address if you would like a copy of this, article or this page of the 6 tips or habits to reduce stress. But as well as it worked through text and through email, you're staring at me. You could also do through social, and that really just helps build your database. Because remember, with social, the more connections you have leads to more conversations. That's why we recommend the DMs, because most of the conversation will go into the DM, and then that's how you create more conversion over time. So
I feel like you just called Todd out of
like a challenge,
doing a social media. Yeah.
I have this great company, Plug
reels.
and Play SM, who does all my social media, and part of their instructions are you're supposed to do your own live stuff. And I just haven't made the commitment. Well, no, I just haven't made the commitment because I can't say I'm busy. I have the time. I just have chosen not to do that. And so it's on my roadmap to build in more social. I just have not 100%, transparently committed to it, but I know I need to. I think it would make my brand stronger by doing it. And dang you for calling me out on it.
I feel like it was a call out, but I do think that's what, it's so smart. Realtors, they don't really understand the numbers side of things and the impact. Like I made a video and posted, I think it was a couple of weeks ago, but it was like, when did real estate become, this was when more people were more concerned about home prices coming down, the price reductions versus like actual depreciation. And at least in this market, there were a lot of people worried that like in a year, their price was going to go down. But I used a playful way to be like, are you only going to be in the home for a year? Like, are you worried about what it says on paper that your value's worth a year from now? Because most people don't, real estate is not like a investment that's a short-term investment. Sometimes it happens to end up that way. But normally it's a long-term investment, just like when you play in the stock market or, other investment vehicles. And so sometimes just helping realtors even understand that, because they know that it's just not at the top of their brain. And it's like, okay, let's just say after year 1, it goes down 5%. And then for the heck of it, let's say year 2, it went down another 5%. But year 3, it increased 5, and year 4. So in the 4 years, you might be back to where you started, but what's the alternative? Are you renting right now? And so
a great video. It was easy to understand.
I even watched that video. It was awesome.
Yeah, I had a lot of, so Todd, since Deb's calling you out, I actually recorded it for social, and I had so many realtors like, wow, that is so common sense, but we're not thinking of that, because sometimes we get so tunnel vision in how we're thinking. And it's easy, of course, to compare it to, okay, if you're renting, then what's the alternative? But this is why I said, and this is now a market of need, not want. If you're a board seller, it's kind of tough to still comprehend that, but you're buying an asset, even worst case, if it depreciates, if rates go down, you're not stuck, you can lower your interest rate. And so sometimes it's just sharing with people, I'm so worried of what the worst could be. Let's just rip that Band-Aid off and talk about it. Maybe you get an interest rate of 7% and maybe the market goes down 5% in a year. What does that look like? Honestly. But then what does it look like at year 2 and year 3? And I think sometimes loan officers get afraid to approach things like that because we don't want the client to be like, well, you said the longest recession was 25 months and you said interest rates are going to come down after a recession. And you're still going to have some clients say that, even if you phrase it like, I can't guarantee this. I keep a 8-ball, one of those old school 8 balls where it's like, am I going to retire tomorrow? And you're like, I keep one of those on my desk because when I do videos and stuff, I will hold it up with the client. There's a couple of reasons why I do it, but people, number one, it's an old school kind of funny thing, but number two, it's symbolic. And the way that our brain works is if you see a symbol, it anchors into your brain more than just words. And so I am strategically presenting that in my videos so that when I say it now, I can't predict, like you could use a crystal ball or whatever. I can't predict what's going to happen. I can say, okay, when are rates going to come down? And it's not going to tell me the answer, but my best prediction is XYZ. In 2 years from now, if that client wants to hold my feet to the fire, I can be like, remember when we were having that conversation and I held up that funny magic 8-ball and we were talking about it? And their mind will remember it. Because you're still going to have clients that want to hold your feet to the fire. I'm not saying that I can predict the future and know exactly what's going to happen, but I can give you my best opinion. And so blah, 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 blah. But the visual, I have a lot of visuals. If you ever go into my office, you're like, is this a mortgage? I have a Rubik's Cube.
Phonics didn't work for us.
Yeah, there's a lot of
Todd uses the crystal ball.
So good though. I mean, it's so good. And it's funny because I would say my crystal ball is foggy, and it's funny. Here I am, see, I got a note on my computer from my coach, Jonathan, said it says focus because I don't want to multitask. So I was going to go to Amazon and order myself a magic 8-ball, but I just wrote it in my planner on my to-do list to do that. And I love that you show it. So let me answer a couple of questions real quick that I'm getting inside of Zoom, and then I'll check Facebook in a minute since I'm trying to stay focused. If there's any questions over there. Someone says, how do I get that video? That video is just on your personal social media page, right? Right, Denise?
Yes, I'll drop it in the Facebook chat. I'll find it and I'll drop it in there.
Okay,
or just
perfect.
follow the Mortgage Nerd on all social channels and set the little alert, which you can do on Instagram and Facebook, and also add people to your favorites feed, which I have a post going out today of how you can add people to a favorites feed. So you can be intentional when you're consuming content to learn.
I just love having my favorite social media person on all these calls as my co-host. All right, so that was question number one. We got a couple questions with regards to the masterclass. So again, Denise doesn't have the website up. It's going to be on October 4th. Stay tuned. You can email Denise@themortgagenerd.com and she will update you. I would just say watch the Win by Noon and the Mortgage Coach channels because we will both promote her event when it comes out. And then lastly, someone is asking about my group coaching. My group coaching is designed to help people consistently close 5 or more loans a month. Already the signups are kind of as expected because it's tiered pricing. It starts at $99 a month for 3 months for people who are brand new. And then it goes to $199 if you've been in the business for a long time and you're repeating that first year over and over again. You're going to pay a little more. And then I guess you have a bunch of people signed up who are big producers who want to learn the tips and tricks and these weekly action plans from me. Put that in there. There's a 30-minute Q&A session in there that's recorded. If you just go to WBN for Win by Noon and then operating-system.com. I put the link in Zoom and in Facebook. So I think those are all the questions. I'll go check out Facebook in a minute. So Deborah, you get to ask your sister the next question while I do that.
Well, I just wanted to reiterate. Said it wrong. I should not be asking you because we will say incorrect words, and because we were raised like we don't even recognize that they're incorrect. Anyways,
Organization.
No, it's organization. Anyways, On our, I think it was Monday, I want to say it was with Bill Hart, which that was an excellent
That was an excellent
interview
call.
that we did with him. So if you guys haven't checked that out, make sure you go to Win by Noon and watch it. But
Hey, Bill Hart coached me
yeah,
in 2000, I think 18 or 19, and hands down, unbelievable. I mean, was such a game changer in my life, in my career, and I feel like he was like my therapist, and I needed
Oh,
a
Lord.
therapist at that time. That's when I was.
was I involved in any of those conversations?
No, but I remember, for the women that are watching this, I was pregnant and I was so afraid to announce to the community and to my realtors that I was pregnant, because I thought that people would think my work ethic would change. And I was at this point halfway through my term. I mean, like my face was I was getting that chin, and Bill was like, Denise, it's time. It's time. I'm like, okay, Bill, well, then we're gonna do it. It was funny. Anyways.
My point to that was, we talk with a lot of loan officers, and I keep hearing the same story over and over about how they weren't focused on their purchase business and during the refi boom, and how it's difficult to maybe rehash some of those conversations where you've neglected your agent partners. And so I just can't stress enough. I mean, and this is not a plug because Todd is on this call right now. I still use my Win by Noon planner. And what I want people to know is this is your insurance to protect your pipeline, so that what happened during this refi boom, because sounds like we're going to have another one coming up. If you would just implement and execute the daily activities, it's not hard. It's like what John Downs said on Tuesday, where consistency is the hard part. If you would follow this formula, then you're protecting your pipeline from ever getting to the point again where you neglected your agent partners or your purchase business for the 2 years or the year in a row, because this is designed to make sure that each little spigot of how you protect and build your business in each area, whether it's annual asset reviews or doing your status update calls or doing your top 40 calls on Monday, get your Win by Noon planner. And we have Christmas coming up. So be intentional and actually give a gift that matters this holiday season to your agent partners, where, there's loan officers or real estate agents that aren't going to be in the business come January. That's the reality. And it's sad because there's people that we really like and we believe in, and they may have all the talent in the world, but perhaps they just need the secret sauce and accountability that allows you to track the activities that either you need to be doubling down on right now to hit the numbers that you want, but how do you know if you're not tracking it? And so I spoke in front of a bunch of real estate agents yesterday, and I had my CMA a day challenge and my scoreboard and my Win by Noon planner. And I mean, people were taking notes and hadn't heard of it yet. So be the loan officer that gives a gift that matters, whether that's to yourself or to your partners, because it will help you stay on track so you never end up in this position again. So that's just my small little plug on Win by Noon. So you guys check it out. My question for you is, if you had to give, say, the brand new loan officer who's listening right now, who may have Mortgage Coach, and let's say the Rate Watch app, how could you leverage the Rate Watch app? I mean, you may not quite understand how the candlesticks work. That was always a hard one for me. Do you track pricing exceptions? How many pricing exceptions do you have? And then how do you use Rate Watch?
I suck at my price exceptions. In
What
part,
do you mean you suck? Do you give a lot out, or?
no, we don't
Oh.
ever. Very rarely, but I suck at tracking it.
Oh.
There's not an easy way. Here's my excuse. You ready? There's not an easy way for me to track it. I just mean on the team when they get it, and then it's like, was it a pricing exception, or is it because there's a lender cure? And then, so that is on my board of what I want to get better at. But the Rate Watch app, I love. And truth be told, when I was starting out, I came from the bank, had no idea how rates worked. I just regurgitated what the smart people said, but I didn't necessarily understand how the watch was made. I just said exactly what they said, and I would write it down, and I would say exactly what they said. And, the format that I was doing it was much like the Rate Watch app and, Dan's recap of, you could just send it out there. Bridge Builders talked a lot about this. Just copy the monthly stuff that they do and regurgitate it. And it is a little bit of fake it till you make it. And you can get away with that for a little while. that shouldn't be your strategy. Your strategy should be to learn more of it. I'm not saying you have to be like a secondary professional, but you should learn enough about it that you understand that if, the bond prices are up, rates are down. But that's how I started out, and how I really connected my brand to being super smart was I just regurgitated what the smart people said, because everybody has to start somewhere. You're never going to be able to this day, I still learn so much stuff and I'm wrong about some stuff, or it might have been stinking thinking, meaning that I've got some people on my team that have been with me since 2012. That's when I left the bank. They've never been in a market like this. At the Nerd Squad, we've never had a year where we've done less in a year. Every year we've done more. And we've never been in a crazy rate market like this. So there are some people on my team that think that arms are the devil. And they're like, I would never do an arm. And why would anybody even do that? And so there's a lot of teaching and coaching I have to do today about why arms aren't necessarily the devil. But they've never been in a market like this. And there's a lot of our real estate partners that have never been in a market like this. And so you do have to learn, and you can learn by watching what the pros do. I would go to the Mortgage Coach YouTube channel all the time, and I would just listen and watch. And now, there's YouTube. You can do a lot more than just even what's on the Mortgage Coach. But the Mortgage Coach has and interviews some of the top-notch people. So I knew that they were on their game. I knew watching Dan and Jeremy and Wally, I knew I could learn from them. And then you just regurgitate and you do what they do. You don't have to reinvent the wheel. You're going to put your spin on it. But I started to learn more and more. I love the Rate Watch app. I love it. And I love the commentary that he gives out, and it gives me perspective on something I might not have seen. And it's an easy swipe and adapt that you can share. And to Todd's point, I'm not doing what Todd's doing. I need to be doing it daily. I do it like spontaneously, of sharing that kind of stuff with the team. Because at the end of the day, if you have somebody that's answering the phone for you, if you're fortunate enough that someone's answering the phone for you, are they educated with what's going on? And if they get that one client, like, do they know? And not that I expect them to talk about interest rates, but are they informed enough? You want the front end of your kitchen to be as smart and well-oiled as the back end of the kitchen. That's when you have the #1 restaurant in the world, is when both the front and the back work well together. So that's my 2 cents. I use a lot of restaurant analogies this year. That's like because let me just say one more thing. I know I'm going on a tangent, but if you go to a steak restaurant and if you're overpaying for that meal, because let's say it's your anniversary or it's a birthday, you go into that restaurant and you know that that's an expensive restaurant. Around here it's called Three Forks. If there's a stain on my tablecloth, or if there's a bug in my water, or if there's stains on the glass, or when I walked in, the hostess they seemed like they were in a bad mood. I had to wait 20 minutes, but my reservation was at this time. Like, my expectations when I go into a restaurant to have my anniversary dinner at, that I'm overpaying, I want it to be on point. And I share that analogy because at my team, we have some people that play roles of the hostess. We have some people that play the roles of the busboy. We have some people that play the roles to make sure that those tablecloths are cleaned. And if someone chooses our restaurant to sit at, AKA our mortgage business, we don't have the cheapest rates in town. So we know that we're delivering a product that's better and superior. Then from the hostess to the busboy to the bartender to the executive chef who prepares the dish and writes the menu, all have to be on point, because one person's role is not any more important than the other. It can taint and ruin that experience. Even if everything else was perfect, if I had to wait 20 minutes to be seated, I'm going to be a little bit annoyed. My reservation was at 6. And so I share that with the team, that everybody's role is important. And as the leader, now Todd's making me feel bad that I need to be every day telling them what's going on and making sure that they're aware. Because if someone's choosing to sit at your restaurant, what they had to do to get there, the gas that they had to spend to get there, the whatever, the experience that they're there for needs to be so over the top that it's worth spending the money for. That's it. Rant's over.
I love it. I love it. I love that you picked a steak restaurant, because we do have the recording of how to build a Chick-fil-A system for your team on the Win by Noon channel, when you were kind enough to share how your team, what that process looks like from you pulled back the curtain. So that was an awesome call. You can go there and listen to that as well. Isn't it awkward, Deborah, when you're sitting there talking next to, like, trying to interview somebody and they're sitting next to you?
Yeah, especially when she turns and I can like feel her looking at me at my face. I'm like,
I know.
I don't know if I should look at you or we have a big TV behind us, but real quick, Todd, I have a question because you coach or have a mastermind with financial advisors, right?
I do. I've got a financial planning firm that I'm on their, I don't know what you would call it, their board of directors, whatever you would call it. I teach 90 minutes a month. I teach them essentially productivity to their team. They've got a real estate agent who actually teaches them about leadership. He owns a Keller Williams franchise and has written a book. And so he's part of their staff. I'm part of their staff. We're on a monthly rotation with them. And then they also have other teachers that come in. In fact, so yes, I guess the answer, that's a long answer. Yes, is the answer. I do that.
So, because one of the things that Denise said is she is sucking at with her financial advisors and doesn't know if they would find, some of this interest rate talk valuable. What are your thoughts on that?
Wait, say it one more time. I was reading a comment here. Someone was talking about Chick-fil-A versus KFC. So I got distracted by the chat. Ask me that one more time.
Chick-fil-A all day. They're not team KFC, right?
They said their branch manager says, did you give Chick-fil-A service or KFC service? I love
Oh,
that.
that's a good one.
Okay.
No,
I was
I love
about to
that.
say, we were gonna have major beef if someone was saying the KFC is better than Chick-fil-A.
Yeah.
So my question was, one of the things that Denise said was she's not sure if her financial advisors would find
I
that.
just don't know what like continuous content, like what are some of the things, I know we're running up on time, but like, what are some of the things you talk about with that group?
Well, it's really funny because I taught them life planning first. And then I continued to teach them really productivity. I actually taught them Win by Noon. We have a Win by Noon version for their financial planning firm that we've created together with them. So I've taught that. I've taught, kind of a deeper look at goal planning, because they do goals, but I kind of took my Todd approach to how that looks. And then recently what I've started to do was, again, it's swipe and adapt, right? I subscribed to Dan Rawich's, I'm in his market mentorship program. And so what I do is I steal some slides from Dan on Mondays, the Monday that I speak on the fourth Monday of every month. And I try to do it in 10 minutes or less, although like the first time I did it, they asked me an hour and 15 minutes worth of questions on the slides. And I put what's going on in the financial markets. I put what's going on in the housing market, in the interest rate market. So I divided into those three things, and it's not a ton of slides. Again, they're not, every once in a while, I mean, I say probably 75% of the slides I steal from Dan, and then the other 25% I'm going to steal from somewhere in the mortgage coach community, typically, Keeping Current Matters or something else. And because I want them to know that that's where their clients are coming from. And, they're a financial planning firm that really believes in real estate. But the fact is, I think people forget is that just because they're financial advisors doesn't mean they're really keeping up on what's going on in the mortgage world. They're focusing on the other stuff. They've got to balance all of their clients' questions about the stock market being down, 15+%, and what are they doing to rebalance, and all these other questions. So they're paying less attention to that. And they're actually not as good at referring you during this time because they're so busy dodging those questions, right? They're going back and forth. And so they're reactive now and not proactive for the most part. And so that's where I was sort of shocked that they had so many questions for me, because I figured they'd be like, yeah, Todd, we know all this. And they were just, super engaged and asked a ton of questions. And the other part was, it was actually a funny story I got yesterday from one of my loan officers. Was he got a call from a client about a HELOC, and I won't go into the details, but said, okay, well, tell me about the rest of your debt outside of the mortgage. And she told him about their car loans and their $25,000 of credit card loans. They got a 3% mortgage, and walked him through a scenario. Again, you got to tell stories of how, I think the client, he had another client that they did refi, paid off $2,500 worth of other monthly obligations. Their mortgage payment went up $500. Now they had $2,000 to be free, and they were going to put $500 kind of into their emergency fund and invest $1,500 with a financial advisor. And when the loan officer told that story, the woman says, yeah, my husband's a financial advisor. And I thought to myself, oh my gosh, 25,000 in credit card debt, all this other stuff. He's definitely not a financial advisor. I'm referring out. And that just reminds me that they just don't know. Not only, they just don't know. So, it's kind of, you never want to be judgy, but I can remember meeting the financial advisor, and he pulled up in the 10-year-old Honda Accord. And in my mind, had to ask myself the question of either he's really freaking frugal. I say I'm cheap, right? But I'm saying he's either frugal or he's not successful, and people judge. And I feel bad to say that that was the case. And, I got to know him, and he did, funky strategies. And then I realized that he had gotten, I knew his backstory after that. I thought, okay, no, he's just frugal. But, keep that in mind. Not all financial advisors actually are that good.
So you two are like the most frugal people I probably know. Both of you.
Be the richest person in the cemetery. That's what everyone always tells me.
Read the book, Die with Zero, if you're going to be the richest person in the cemetery. It was a game changer for me. And we interviewed Kevin Kaufman on here, and he interviewed the author of the book. And it was a great, again, you can all ping me that. I'm going to I'll throw it over in the Win by Noon Facebook group, because I got a couple of people who've asked about Jonathan's his little email. So I'll throw a document in there with Jonathan's 6 things to reduce stress and the script that he gave. Just go over to the Win by Noon Mastermind group on Facebook. It's going to say, are you a Win by Noon user? You can say no, part of Mortgage Coach, and I'll let you in. You don't have to be a Win by Noon user to use it. So we can give you that information. Let's make sure we share it. And I love hearing that you're cheap, Denise, because that's prior to COVID, the years I made the most money, I drove a Prius.
Yeah,
I believe it.
I just don't. I'm not a car person, or I want.
Or material.
Yeah, I'd rather travel, or I don't. Again, I'm not the exciting. My pendulum only goes like so. It's like sometimes just a home cooked meal is enough to get me excited. I don't know.
That'll be our next call. We can talk through, because my wife would rather we spend more money every day. And I'm the guy who saves money every day, so I can spend on those big experiences. And I'm happy to always happy to share, peel back the curtain of, a little over a decade ago being, flat broke. In fact, almost $1 million in debt, and sort of how life is today, a lot different.
Yeah, but I feel like the savings and the investments, it's not that I aspire to be frugal, it's that I aspire for the freedom. And so I don't ever want to feel like I have to get up and work that day to survive. And so what are you laughing at?
I was gonna do our little.
Gosh, I was laughing at my freedom. I just want to be free.
No, something else came in my.
What a jerk. Wow. Anyways, so the savings for me is it's the freedom point. So I guess that's funny. Take that to
No,
the
I
bank.
was thinking of something else in my head.
Okay.
All right. Well,
Okay, Todd, so you got to coach Todd and wrap it up for us.
All right, let's wrap it up. So first off, thank the two of you for being there together. I know it's hard, and you always ask great questions, Deborah and Denise. You always add a ton of value. I definitely know we in our community are going to support you in your master class. We always appreciate you taking time. And I think really what you've got to do after you've watched this is take a step back and say, what are the actions I can take today so that this hour I spent wasn't an hour of entertainment, was actually an hour that I put to use to make more money. And I think there's a ton of things, but I would think about what's the video content I can do. So I'm going to watch Deb's little thing on putting a sticker on a reel, that square thing with the happy face. See, I took notes, Deborah. You don't think I did. And I'm going to figure out what can I do to take that idea and make it actionable. But what's the idea that you can take away from here, whether it's the idea with Jonathan's 6 steps to reduce health or otherwise, but think of something that you can do. Pick up the phone, call a couple of realtors, ask for their feedback, pick up the phone, call a couple of financial advisors and tell them what's really happening in the mortgage world. But as always, super grateful for the two of you, and look forward to you in the community engaging with us and learning more. So we will see you all soon.
All right. Take care.
Oh, last thing is, if you're going to be in Vegas for Mastermind, look for Dave and I there. We're going to record Friday. We'll be sitting next to each other like you guys next week in Las Vegas. Dave's going to stay so we can record together. So we'll have that awkward thing to talk to us. And but if anyone's there, just ping me, say hello. Would love to put a face to the name and our great community. Look forward to seeing you guys there.
So this will be y'all next week, side by side.
All us next week, sit next to each other. It's just so much easier on Zoom to do an interview because you're looking at the people.
Yeah. Okay, well,
Bye.
thank you.
Thanks, guys.
All right, take care.